Welcome back to Morning Trade Live. We've got stocks pretty well bid right now, riding the wave of Nvidia after an earnings outlook that was better than expected and enough, it seems, to keep the stock going. Future is a bid and the NASDAQ up more than 1%. We've got some economic data to assess as well. Joining us, Ann Sonders is Chief Investment Strategist at Charles Schwab. Morning, Ann.
Morning, Oliver. How are you?
Pretty good. We've got, seems like a pretty good base here for the stock market today after Nvidia last night. I know you're not a stock-specific analyst, but from the theme of this group and secular, move that we've had, kind of backed by this company, does it seem like we've got a fresh, catalyst here?
Sure. So obviously, NVIDIA is important through psychological channels, but it also represents more than, and this is before the release of earnings, more than 3% in terms of the weighting of all S&P 500 earnings. Now, Apple and Microsoft are larger than that, but the percentage change in NVIDIA's earnings are much higher than either of those two, which is why if you look at the tech sector for the first quarter this year, expectations are for about 24% earnings growth. You exclude NVIDIA, and I haven't done the math since the earnings release, it drops down to about 11%. So incredible power here. I think from a bigger picture perspective, one of the things we're seeing is that technology is such a dominant segment of the U.S. economy. And when you look around the world, one of the perils is comparing valuation levels, one region to another region or one country to another country, without taking into consideration what is the primary economic driver of their economy. And because technology and innovation is an important driver of our economy, all else equal, that is supportive of higher than average multiples relative to, say, if your economy was driven by, the mining industry or financial services. So it's a narrow picture and bigger picture way to think about the importance of a stock like that.
No, I like that. It's a good reminder of what really matters here and what drives the bus as far as markets go, and the tech trade that has some connections into its other biggest mega cap companies, right? This kind of secular theme. I wonder also in the discussion about this company's impact, how do you think about productivity and potentially what some of the products and services around this technology are going to do from a macro perspective? Is any of that in the near-term horizon, Lizanne?
Absolutely in the horizon, near term and longer term. I think it's perhaps a bit premature for anyone to try to attach precision around productivity benefits and how much of that is a function of AI. I'm very optimistic about what it brings into the mix longer term for investment. And I do think the investment side of the U.S. economy is going to continue to pick up share relative to the consumption side of the economy. And I think that is a longer term, more supportive backdrop for the economy, ultimately better for job growth and opportunity, even if there are some near-term dislocations. It's just hard to pinpoint how much is associated with decent productivity at this point. It is interesting that we're just finishing up earnings season now, and mention of AI in conference calls, and not just the infrastructure providers, but AI just more broadly, the adopters of AI, has waned a little bit. That's not to suggest that the enthusiasm around AI has dropped precipitously, but maybe the level of extreme hype seemed to have peaked in the fourth quarter of last year.
Well, it's interesting because given our macro situation, a lot of folks would like to find a sort of panacea to inflation, and many argue that tech ultimately is disinflationary as a force. But I guess we shouldn't be counting on these immediate and out of the gate AI breakthroughs as being the problem solver for our inflation situation.
Well, not only that, but we've got some sort of economic warfare going on around the country, around the world, I should say, in addition to, in the post-pandemic environment, rethinking supply chain, both location as well as diversification. So there's costs associated with that. There's costs associated with the build out. So I think you can look at something like AI as representing components of sort of a disinflationary force, as well as components that represent, at least in the near term, an inflationary force. So I think there are cross currents in both directions.
Okay. Speaking about the more core data here with jobless claims, a little bit of a improvement from the last couple of weeks, Lizanne?
Yeah, a bit of improvement not just in the initial report, but the continuing claims. And that's good news because we had seen kind of a step up in terms of claims. They are still low, obviously, in absolute terms, but the trend is still important. And I think of all the shorter term economic metrics, and claims, of course, are weekly, I think this is an important one to watch, especially in between the big monthly jobs reports. The move back down a little bit in continuing claims is supportive of this notion of labor hoarding, and that we're not seeing a lot of new activity in terms of hiring, but we're also not seeing a lot of firing. There have been some high-profile layoff announcements, but in the grand scheme of things, they're relatively small, and that's why you're not seeing the same kind of uptick in claims that you might expect. Where you are seeing the hit, and this comes in the jobs report, is the hours worked, which has continued to trend down. So I think you really do need to look at the whole spectrum of labor market metrics, both weekly and monthly, to get a full picture of what's going on.
So where things have softened, it's still mostly around the edges. We haven't had any major, cracks, massive disruption to kind of the core job situation. But to your point, some of these things have worsened on the margin.
Yeah. And it's why I think there continues to be this higher for longer. The minutes I didn't focus too much on because it predated the weaker than expected recent jobs report, as well as the most recent batch of CPI, PPI numbers that were a bit more benign. But I think it's very clear that in the absence of inflation getting down to or very near their target, which doesn't mathematically appear likely this year, what the Fed would rely on to get the green light for easing policy would probably bring the labor market into the mix. And I'd say the combination right now is supportive of patience and not moving near term.
Okay. Great stuff, Lizanne. Thank you very much. Fantastic assessment here of the stock specific incorporation into the index level and macro level, as well as a look at the economic data here. Ann Sonders, Chief Investment Strategist at Charles Schwab.